Hey, it's H here, and on today's video we're checking out gold. This chart is gold US dollars against ounces. This is a Tradingview chart on logarithmic scale, and let's get right into it. So gold has been around for quite a while. The start of this chart is from 1800s. Don't ask me how this data is achieved or how relevant it is actually. So that is something that I can't answer to you. However, this is the count I've got for you today. This here in the 80s is the Grand Supercycle 1 ending. Then the next 20 years we corrected down with ABC into W, ABC into X, and ABC again. That might be actually it could be another WYX into Y of Grand Supercycle into this into Supercycle Y of the Grand Supercycle 2. Now at the 2000s we started the Grand Supercycle Wave 3, and this here is the cycle wave degree completed into Supercycle Wave 1 up here in the August 2011. From here on out we corrected another 5 years to the wave 2 of this supercycle. ABC into W, ABC again onto X, and WXY into the Y of the Grand Supercycle 2. And from here, let's go over this first, why I had labeled that as it is. We can check out the with this just with a retracement, and why I didn't think any of this has completed anything of this Grand Supercycle is just because of the fibs. Wave 3 extension is around the 0.618, which tells me that it definitely hasn't completed the third one. The third, normally, this is the 1618 is the minimum extension of the Wave 3. So as you can here see, current price is around the $2,000, and 1618 on logarithmic scale comes up to $47,000. Think about that for a second. 47,000. That is a lot. 23x for gold. That requires the world economics to become something that has never been seen before. That is going to be something that is going to take a long time. So don't keep your breath. In any case, now that we have that out of the way, we get ourselves into this Supercycle 1 and Supercycle 2 completed, and the just the end of 2015. Now, then we get into the fun stuff, because this chart is not simple. I have labeled this variation of this count with 1 primary cycle, 2 primary cycle, with WXY in between on the intermediate degree. And then we have this third wave. Let's check out again the extensions. So we go extend around 2, give or take, but the main thing is it's above 1.618. So whatever this move here is, it looks to be on the same degree. However, as this is the wave 2 correction, it is not unheard that this could be a bigger B wave of this wave 2 of Supercycle, and only after 1.618 we can clearly determine that this whole thing is not part of this Supercycle correction anymore. If we go above this 1.618, only then it's again it can be part of this, and in that case we would be looking for something else here. These targets 1236 and 1382 are right at the 2.618 extension of this 1-2 or ABC, and these are still valid targets for the B wave, and that is something to keep in mind. Now, what makes this move difficult here is actually the March 2020 crash. We can go into smaller time frame to look into what is going on here. So again, here's the primary 2 ending around August 18th, and here's the August 20th primary 3rd as labeled on this count. There's other counts I can show you in a bit, but we'll check out this first. So I've labeled this 1, 2, 3. Let's actually check that this is valid. Yeah, 1 is here, but again 3 is not getting to the 1.618, which is not good. Now we could argue 3rd would be here, right at the 1.618, but the thing is, if the correction for the 4th would be this, start would be this here, this ABC, and if we pull the fibs, you remember the B wave shouldn't cross the 1.618. Let's zoom in a bit, but this does quite a bit more. So that is why I'm really hesitant of placing 3rd here and then ABC into ABC and then the 5-wave move. So it would be something like this. Now this would work very well, I can label it for you here, if this B wave wasn't so big, or if we don't like to get into smaller time frames and measure things. We wouldn't know this when we're looking at weekly or monthly, but this is just something that you need to keep in mind. So for this current count, I'm holding 3 and 4 here, but it could be here. That is the issue with this count, as I mentioned. Now I have a different count here saying, just for the comparison, primary 3rd is ending here, and we have the primary count here. We can make it red to correlate, and this is the other count. we would have wave 3 of primary wave ending here. Now, what would this mean? This would mean that this target is not hit, which is not good, to be honest. It's not good, but it is possible. You don't need to have a 1.618. The issue is here again that this brings the fifth and cycle 1 already here. And just by looking at this shape of this primary wave, you wouldn't really believe this is the case, right? Let's just try to enter there. And this is the shape it provides us. 1, 2, 3, 4, or maybe like that, 4 and 5. Now, it doesn't provide us any symmetry with the time element. This wave 2 took more than 2 years, and this wave 4 took 21 days. There's a huge issue with that on my mind on this count, so that is why I'm not keeping this really relative count, and I would almost like to disregard this completely. But I just wanted to show you what is possible. In any case, if this is 1, 2, 3, 4, could be here, or again could be developing. If we place the 4 of the third primary degree in here, it's almost the same as here, price wise. And why I'm saying that is because usually the primary 4 likes to go or likes to end around the previous third wave's fourth correction, so on this area here. Now, I haven't analyzed this area here, but that is one area where it might end up, and there's no issue with the primary 1. Invalidation is down here, and we could easily come back here. Now, this current price action is largely now about the war currently, and I wouldn't concentrate too much on it. I just want to give out some higher degree targets anyway for this primary wave. So how you do that is when you determine where the wave 3 is ending, wave 4 is ending. And how you do that is just basic fib retracement, and then you check out these levels. Now, this is a bit discerning, since the 382 is already ending here, and usually wave 4 doesn't go this deep. 0.5 would be really deep already and shouldn't go past it. Now, that is not a rule, that is just something that is not usually happening, and it's guideline. And 0.382 is the most often retraced wave 4. So we could do this, or it might have already ended, and this might be some kind of wave 1. If that is the case, we can expect new all-time highs. 2087 would be the next target, and that would be on intermediate scale. So this would be 1, 2, 3, 4, 5 maybe, and fifth or third could have an extension as well. But for the fifth of primary, assuming we ended here, we can take this wave 1 and extend it to 4. Now it's getting a bit messy, so let me clear that up and delete that as well. And as wave 3 has been a bit extended, we can target, let's see again, 1 to 1 or 1618. So 2200 wouldn't be a surprise for me as the primary wave 5 target. Of course 2600 wouldn't surprise me either, but again you would look for the development of the intermediate wave count as well for this, and I haven't analyzed this part yet, so take that with a grain of salt. In higher time frames, assuming this here is the wave 2, we can start looking for real moonboy counts. Same technique. What is that? 27,000? 27,000 here. But yeah, in the near future, in the near years, I guess, we could expect 2200 gold, and from current price action that would be around 16% to 40%. That is a huge gap there, of course, on price, but that's the targets I want to give you here. But I think that's enough rambling here on this shot, and let me know if you have another count on gold. I would be especially interested on how you determine this part, so let me know, and thanks for watching. So see you on the next one.